Okay, let's put all of that in perspective for you then and talk about how that's likely to impact both local as well as global trade over the course of the next few weeks. And joining in for just that, we've got Michael Hewson of CMC Markets, we've got Saibal Ghosh of Aegon Life Insurance, and of course Michael Van Dulken of Ascendo Markets will also join in on the phone line in just a bit. Gentlemen, all three of you, thanks so much for taking time out for us. Saibal, let's first talk about, the local factors at play. The swiftness of this rally that we've seen for our markets has surprised many. Are you surprised? And would you also say that perhaps we're looking a little toppy, a little frothy? What are you making of valuations at this point in time?
The valuations are expensive in the sense that if I see it in terms of 1 year forward multiple or 1 year price to book, or for that matter India's premium over other emerging markets, all parameters are above 10 years average level. So market is expensive. Market is definitely discounting quite a bit of positive factors going forward. But at the same time, this is also not unusual because we believe that we are at a very early stage of earning recovery after a prolonged stagnation. So market would tend to overstretch from time to time. But at the same time, I think one should be cognizant of the fact that the return on equities of the Indian stocks have fallen or crashed by half from what it was a decade back. And return on equity to earlier level will take its own time. So one has to be extremely cautious while investing in markets such as this.
Saibal, apart from that, how are you looking at or analyzing not only the earnings but also the commentary coming in from some of the large, the heads of the chiefs of these banks or large companies? For example, just today SBI chairman said that there is a case building that they may hike the credit growth outlook of the bank mid-year. Now this coming from the largest state-run bank SBI, which is also seen as a leading indicator for the economy. How have you analyzed this kind of commentary?
Yes, comments are mixed, I would say, but so far the numbers what we have seen, the first quarter numbers, is I would say flattish to maybe mildly positive. But what is important is that the underlying revenue growth is still lower than the market consensus, while there has been a positive surprise on margins. And the lead indicators what we are seeing so far in the market is still mixed. It's still not giving a clear indication that the recovery is very near at this point of time. The commentaries, as I said, again mixed, but I would still not read too much into it at this point of time.
Sure, Saibal, you remain circumspect about the quality of earnings, but at least do you see deceleration in the downgrade cycle which was on for corporate India almost for a couple of quarters now?
Correct. I think the downgrade cycles are definitely coming down. That's a very good news. But please remember, market to sustain at this level, what we require is serious, what I would say that upgrades, and that is hopefully is not too far.
Okay, so if we were at say 18x, is it conceivable that we may go back to 15 to 16x?
No, I think more than the market level, what is important is the stocks. At this point of time, we are definitely scanning for valuation comfort in the market, and that's actually quite a struggle. So, as I said, that more than the market level, what we require is some kind of valuation comfort somewhere. So that's the perspective.
Some of you also suspect that the market, and I mean our market, is ignoring some of the global risks right now that exist, and that actually may not hold us in good stead?
When the market was 13 times or 12 times, the risks which were insignificant, those risks become significant when market is at 17, 18 times. So the global risk is still there, and I think the global risk is much larger than the local risk at this point of time. And I'll not say people, market is ignoring that, but that is something which is still there, yes.
We leave it at that, but of course the focus now shifts to what's happening as far as global markets are concerned. Remember, at the start of the show we were talking about how you are seeing at least indices on Wall Street sort of pull back from the records that they were sitting on just yesterday. But in some late evening news, a long-awaited trading link between Shenzhen stocks and Hong Kong's market is set to open before the end of the year, and this will for the first time allow international investors to now trade stocks that are listed in Shenzhen, which we know is home to many more technology and startup enterprises than Shanghai bourses really have to offer. This is also being seen as